Hi everyone, and thanks for joining us today for WordStream and Hannafin Marketing's joint webinar, Are You Spending Your PPC Budget Wisely? Best Practices and Creative Tips for PPC Budget Management. My name's Chris and I'll be your moderator for today's presentation. For today's agenda, we have some great PPC budgeting insight lined up for you. We'll be discussing how much budget you need to get started in PPC, how impression shares impact your budgeting decisions, X versus Y, things to consider when setting your PPC budgets, and this includes high funnel keywords versus money keywords versus branded terms, search versus display, Bing versus AdWords, and mobile versus desktop, and that's including tablets. And lastly, we'll show you how your PPC budget impacts your PPC management model. To introduce the speakers for today's presentation, we have on the webinar Larry Kim and Carrie Albright. Larry is the founder and CTO of WordStream. He's been doing PPC and SEO for 10 years. 3 years ago, he started WordStream, and today WordStream is an industry-leading provider of PPC management platform and keyword research tools. We'd also like to welcome on the webinar today from Hannafin Marketing, Carrie Albright. Carrie is an account executive and active blogger at ppchero.com. She brings years of dynamic leadership, creative thinking, and problem solving into her current position. ppchero.com is also the leading site for PPC strategies, news, and information, which all the awesome people over there at Hannafin Marketing help deliver on a daily basis. To share today's webinar on any social media channels, you can include the hashtag #PPC Clinic. With that, let me hand things over to Larry and Carrie, and we can get started with the webinar.
Awesome. Thanks, Chris, and thanks, Carrie, for joining us today for the webinar. It's a real treat to do these things with Hannafin Marketing. So before getting started, we usually kick things off with a poll just to kind of figure out who's on the line. And we thought, because today's discussion is mostly based on sort of this notion of PPC budgeting, I thought a good question to ask would be sort of what's your PPC budget? Like what are you working with right now in terms of your PPC ad spend? If you're outside of the USA, try to convert to US dollars here. But there's different options, $1,000 a month, above $25,000 a month. Just want to get a sense for who's on the line today. So just lock in your votes, please, and let's see what we look like here today.
So Larry, I've got a question for you, just knowing that you've done a lot of webinars, have a lot of experience with this. When we're taking this and wondering about what kind of budgets we've got from our attendees, what have you found in the past has been sort of a general type of audience that you've normally worked with?
In terms of WordStream?
Yeah.
Yeah, so we work with primarily small and medium-sized businesses. Average spend, I'd say, is around $2,500 a month. How about you guys?
Well, we actually do a pretty big variety. We've got some clients that spend into the $100,000 a month, and then we also have some especially small business packages for people who just want to just have somebody with an extra set of eyes, a little extra expertise working on it. So that could be as low as a few $1,000s a month.
Oh, awesome. So, Chris, how's our viewer results here?
All right. Well, it looks like we've got a lot kind of in that middle range that are probably getting just a little too big for their britches if it's somebody that's been working in-house trying to manage their PPC that are actually looking for a little outside insight to how to best manage their budget. So, looks like we've got a good range of budgets.
And I think we have one more question for the audience today, and that's basically, when we're talking about budgets, what would you find kind of most frequently limits your budget? Is it maybe you have a certain amount of budget across multiple channels that you have to be allocating? Is it the performance not there? Does it have to do with kind of nervousness or around the effectiveness of scaling your PPC efforts? Or is it just like you're not really sure what to do in terms of like where to invest in PPC? So we'd love to hear, which of these would you say kind of is the limiting factor here when it comes to budget expansion? Any thoughts on this one, Carrie?
I'd say a lot of the clients I talk to seem really interested in the option to expand, and so it's not necessarily that they don't have the budget or even that they are uncertain that they can sort of validate that because of their past performance, but really I think knowing what's the right fit for them when they want to expand, so knowing what are the new campaign structures or new opportunities that are out there and maybe being unsure of exactly how to implement it for them. So I'd say D is probably one that I've seen a lot.
Sure, the scaling PPC and all that stuff, it's definitely a challenge. Let's see what our audience has to say. Hopefully we didn't bias them too much by chatting. Here, performance not justifying expansion. Oh, that's interesting. So maybe we should have been doing an optimization clinic.
Note to self for the next webinar.
Lack of knowledge. Okay, so yeah, it's all over the place again. So it's probably above, I think. All right, so I thought now that we've done this poll, we're going to hand things off to Carrie to take it away here in terms of leading the discussion. Take it away, Carrie.
Great, thanks so much, Larry. So I'm going to start with just talking a little bit about leads and about how you even look at what you're trying to accomplish with your PPC. Larry and I discussed the fact that there are definitely two versions of PPC regarding e-commerce and lead generation. And a lot of times with e-commerce, you get really nice, clean numbers on the back end. You can actually associate revenue with exactly what kind of purchase is happening, and you can see some very clean data to make your judgments off of. With lead generation, on the other hand, it's a lot harder because you need a lot more factors to kind of include in how you estimate what the value is in the leads you're getting from PPC. So we're going to talk a little bit about that and also a little bit about how you can identify what to do when it comes to budgeting for that kind of conversion. All right, so we can kind of assume that if you're marketing for your business that you already have some of these questions running through your head and hopefully have answers for them. Things like, what can I afford to spend? Presumably, if you've got any sort of marketing team or marketing efforts, you sort of know what kind of budget you're working with. So you know how closely you're running to that maximum budget and how much you have to sort of experiment with, which is where some of the stuff we're going to be talking about today comes in. What's my CPL? And basically, that's saying, what is it that I can afford to spend for each of the leads that I bring in, each of the conversions. And then the third question is, how do I place value on a lead? Basically saying, when I rake in all these contact forms or some sort of notification of interest, how do I actually know that that's going to be something that's worth my investment, that on the other end, it's going to lead to a larger an order or perhaps some sort of contract or arrangement there that actually is going to be worth something to you. So the questions that we then want you to ask yourself are, how many leads am I expecting to bring in? And that's sort of in reference to actual PPC investment and knowing what is it that you need to bring in from this effort to be profitable on the other end. Also, what's your current conversion rate? This is probably something that you actually have a feel for based on the kind of contacts that you're already receiving and what kind of close rate you've got on those. You sort of know, maybe 10%, 15%, 20% of the people who reach out to you actually do end up following through with your service. And then how many leads do you need through PPC? Again, that's kind of just doing the math on, at the end of the day, what is it you're going to need to bring in to compensate for that conversion rate, to make it profitable? And then lastly, what can I afford to spend for each lead? So saying, if I've got an end-of-the-day number that I need to achieve, how much is it I can put into it? All right, and so these are some quick calculations for how you would figure this out. This is just some quick math to kind of run through how that math would work for if you have 250 leads that you're looking for to bring in through your PPC efforts. So you've sat down and said, okay, we'd really like to try and do PPC up until the point where we can get 250 contacts and solid contacts. And from your previous marketing experience, you could say, I've got 15%, for example, for our conversion rate. And that means that what you'd need to bring in would be 1,667 leads. When you're doing your calculations on your end of what kind of investments you're making in your marketing efforts and what kind of return you need to get, you've established here that you can spend $25 per lead to make this worthwhile for you, which means that your budget then would be set to about $42,000. And it's important to notice that the daily budget then would be $13.88 because when we're working with campaigns, as you know, we set those in the form of daily budgets. So once you put all these things into play, especially if you're new to PPC, obviously you need to set that up and let that run, but there are so many different kinds of optimizations that you could do once that's up and running. And kind of like Larry said, we we may want to do a bit of a clinic on just basic optimizations in the future to make sure that people know how to most efficiently alter what their PPC presence is, or even what their landing page is, to best increase the number of conversions that they get, and also what that qualified data looks like. So optimizations would happen after you've set all this stuff up, but this is sort of a jumping off point.
Awesome, and I would just add, Carrie, listeners, to when doing this budgeting process, to build in a little bit of a buffer in that these, like as it says here, the optimizations take time, and it's going to take a little while for the results to settle into where you need it to get to. So just budgeting for the expense of just experimentation and figuring it out.
Yep, I totally agree with that. So in this slide, I just kind of touched on a few different things that affect how you can value your leads. Like we said, with lead generation, there are so many different factors that might play into what you consider a worthwhile lead. A lot of the clients that I've talked to about how we can best identify what traffic is relevant and who it is that at the end of the day is actually a good investment for them as far as their PPC efforts. Because obviously we'll be getting in leads that are just people casually looking for more information versus people who are ready to invest. Some of the different factors that I've got just as sample indicators for what might qualify your lead would be geography. Are your leads more or less relevant based on location? So if you're only offering services within a certain location, it's going to be clear that you would want to do some sort of targeting to make sure that you're not pulling in folks from outside that region that wouldn't actually be able to follow through with your process. Another is frequency of interaction. So do most leads have a complicated attribution system? And by that I mean there are a lot of different ways that your users may be interacting with you. It may be external sources like Twitter, for example, and they actually are really interested in what you offer there and are going back and forth between that and your website. It may be somebody who's actually been to your website before and you've remarketed to them, or they've purchased something and you've followed up with them on that, and that may be a relationship that you've got to turn to and say this actually is a positive dynamic that we see. Another sample would be bounce rate or time on site. So what behavior does your user have after they've clicked on your ad? And that's definitely something that, especially as you're getting into the optimization period of your campaign building, that's something that you want to look at as far as the people that you're bringing in. They may or may not convert, but what are you seeing with how they're behaving once they get to your site? Are they spending a lot of time looking around? Are they immediately turning around and going back to whatever their search results were? And really looking into how they behave once they get to your landing page can give you some insight as to what kind of quality that's going to be. And then also with precedents, what have you seen to be qualified in the past? There's so many different ways to track your lead quality, to follow up with your clients, or if you're working in-house, to really look at that back-end data and start making connections between what kind of behavior you've seen that's actually turned into those full orders or contracts or whatever kind of service you're offering. So really trying to connect whatever data you have with your efforts through PPC. So here are a couple examples of how you might segment the data that you have to really identify if you are using your budget as effectively and as efficiently as possible. And this is something that Larry's definitely going to get into a bunch more here in just a minute, but I thought I'd come up with a couple different options for what it is that someone could look into to identify if they're being as efficient as they can. The first one is negatives. Now, Larry, I know that WordStream's got a negative keyword tool, and I know that there are a bunch of different posts that you and your team have come up with to discuss the value of implementing negatives in your campaign as far as reducing spend.
Yeah, absolutely. It's shocking to see kind of sometimes what you end up matching unintentionally against in your ads there.
Yeah, I think that that's sort of been a fun thing for us to do around here on PPC Hero. We had a few different posts about what the query, where we'd go through and actually identify really bizarre things that people would look up that may or may not be frequent sources of sort of invalid clicks for us, but it's definitely interesting what people look into and what kind of trends you see as far as what your traffic's doing. Yep. Another factor on here would be placements. So this is kind of a similar concept of trimming down the stuff that's not going to be relevant, that's not leading to the types of behavior you're looking for, which in this case we're talking about conversions. So we would look through and actually see what is spending money that's not coming out on the other end. And actually, speaking of PPC Hero, we've had a couple posts from Sean Quadlin. I know you and Larry, you and Sean have had some webinar time together, and he recently had a post about just a 1-hour placement report, which sort of diagrams how you go through and really weed out those placements that are behaving in a way that needs some sort of response, either because they're doing really well or because they're doing poorly and you need to cut those out. But that's a good place to go and actually evaluate what you've got. Another, actually kind of a combination concept of negatives and placements are site exclusions. And Eric Couch, who's a gentleman here at Hannafin and a PPC Hero, he actually wrote a whole blog post about that just really goes in and shows you how simple it is to put in site category exclusions into your display efforts. So that's really helpful. It's a really good way to trim down some of that excess spend and really get your budgets to where you're investing them in what would be most beneficial to your PPC efforts. Last one I have is for day parting, for time of day and day of the week. I have so much fun looking through different kinds of segmentation and looking at how performance changes over time, through the week, through the month, through the day. It's a lot of fun. It gives you a lot of insight. And sometimes it's hard to make a call based on how much data you have, when it's statistically significant, when it's not, but it definitely is something worth looking into. So on this next slide, I have just sort of a demo glance at how I would do that. So here I have two different types of campaigns. I've divided them into domestic traffic and international traffic. And so what I can see is that I do have consistent CPLs, or cost per lead, through a lot of my days of the week for the U.S. and for international. But then when you get to the weekend, especially in that international campaign, we're seeing a consistent CPL that is so much higher than everything else. And even on the Sunday of the international week, it seems like that's a higher day. So that's something I've been taking a look at and really watching and saying, okay, is the quantity and the quality of the leads I'm bringing in on those weekends when I'm paying a lot more for those conversions, is that going to be worth it for me to keep doing it, or should I dial it back a little bit, which is where bid adjustments or even just changing my ad scheduling can really come into play. So using those different kinds of tools to really adapt where you're spending, when you're spending, can really help keep that budgetary use to its most efficient. So growth opportunities. Now, I really love talking about tools, so Larry, it'll be fun to hear you talk about some of the stuff that you guys have, but I really like having different kinds of tools just to base decision-making off of, or even get ideas for what you can do next. So one that we talk about a lot has to do with how you can adjust your budget to get the best and the most traffic. So here I have a couple different things. I'm guessing we all have seen at some point or another the limited by budget icon in our campaign statuses. And what that basically means is that AdWords is ready to keep on going, keep on showing your ads, keep on spending on your clicks, and you don't have your settings adjusted so. And which sometimes are reasons that you may want to hold your budget back. There may be times that you don't even realize it's limited, and it's a perfect time to just open that up a little bit more. But here we can see that my loss search or impression share for search is 63.62% for because of my budget. And so what that makes me say is, okay, that's more than I'm interested in. When I look at these different kinds of impression shares, I sort of look at them like a grade card, where I think that most people can probably get a C in most things. And if you put a little effort into it, or even a medium amount of effort in it, you could probably get a B. And if you work really hard, there's a good chance you can get an A. So although impression share isn't always about getting 100% of the impressions, I do think that it's worth taking a look at, especially if you're seeing those numbers creep into a direction that might indicate that you're missing out. So when you look into the little icon that gives estimates based on what Google's seeing and what Google thinks you might do, you can see here that they're looking at one of my campaigns and saying, okay, you're set at 30, but we see that if you switch it up to $60 a day, you could bring in this many more clicks at this much more cost, and staying in a consistent CPC. So when I look at the graph that they give me, it's pretty clear that they feel like I'm missing out on quite a bit of traffic. In this particular account, it is actually an account that I would like to make sure that I'm pushing all the traffic that I can, that I that I've got it pretty well whittled down to exactly what it is I'm looking for and who I'm looking for, and I know this campaign has some room to grow. So on the next slide, I've got, I think, one more little assessment of this, looking at my different campaigns and looking at what kind of budget estimates I'm making here. So I say that it's estimated that doubling our budget will lead to double our clicks. Well, that's what AdWords says, and of course we know that when you've got those sort of blanket estimates, of course there will be room for error, room for change, things like that. So certainly don't bet the whole farm on an estimate that you get from the AdWords interface. But it is certainly a good place to start and a good place to actually start looking into what kind of changes you can make. So if I'm keeping our conversion rate constant, which is always part of one of those assumptions where we're just going to use this for our calculations, our conversions are expected to increase by, and if you see here, you can see that it's expected to double. Now, whether that happens or not is something that I'll really have to follow up on and make sure that my conversion rate is staying consistent, that the quality of clicks I'm getting isn't changing for the negative, but that I'm actually seeing that kind of improvement. Because it's possible if I continue to bring in the traffic I have now and just double that volume, that I will actually be able to bring in that many more conversions. So then when I break down my daily spend and how I'm going to handle my budget, that's kind of how I would make those adjustments.
Awesome, Carrie. I'm glad you brought up the concept of impression share here and budget, because I think that's actually, for me, it's the most important metric that I look at when people ask me about, like, am I investing enough or is there room to grow in terms of their PPC budgets. Basically, for me, the impression share, it kind of tells me if you're in a buyer's market or a seller's market. So what I mean by this is if your budget's tapped out and you're at a 20% impression share, well, then that's it tells me that you should either be expanding the budget to capture a little bit more of that, or that you could be a little bit more picky. Like you could be, you know, maybe your targeting is a little too broad, or you know, like I'd rather see them having kind of a slightly higher impression share for the budget that they have, meaning like being selective in terms of their keywords and targeting. So that's the way I look at things. Any thoughts on that?
Yeah, I think that absolutely makes sense. Sort of keeping in mind what's happening in your industry and sort of seeing where, kind of being able to use that impression share information as sort of identifying where you fall in that sort of race to get that click and that conversion. It's really helpful to see that. So yeah, I think you're right that kind of gives you an idea of where you should sort of start steering yourself as far as your targeting and your setups and things like that. So this is a quick snapshot, and I'm sorry for those of you who shy away from lots of numbers and crunchy data like this, but this is one of my favorite things. This here is just a snapshot of kind of a way to go back and adjust your budgets and really see how they're performing. So these are just a series of columns of data that I've grabbed over time as I've gone through and changed what my daily budgets are for these various campaigns. And so what I've done is actually gone through and watched what my budgets are set to, and ensuring that my daily spend is sort of reflecting what those different budgets are. So I've gone through and I've taken what I spend as my expected daily spend, and then actually calculate out what I'm currently spending to really get an idea, sort of what we talked about, of am I spending to my full potential? Do I have room to grow? Am I really maxing out? And I've got some campaigns who are needing to be expanded upon. And then doing some calculations just based on what kind of change do I need to see. If it's because I've got room to grow, how can I make sure that I put those numbers into effect so that I can expand my budgets but maybe not go over what my monthly limit is, or not necessarily just increase the budgets without any sort of intention behind it. So this is sort of just a little bit of calculation and saying, okay, if I'm trying to get my budgets to change by a certain amount, here it's $19.14. What I'm going to do is I'm just going to adjust some of my campaigns based on their performance and based on how they've been using their budgets thus far. And I can see that I've pulled mine down by about $22 just in this particular most recent adjustment. And then I'll go ahead and watch that for a few days and really see what kind of changes I have. So with the overarching strategies, some of the questions here are, how can you better define the quality of leads, and how can you identify your marginal gain from each dollar spent? And like I said, in working a lot with lead gen clients, it is a really difficult thing to identify across the board. A lot of times it really has to do with the particular industry, the particular business model that your client or your company is working with. So the most important thing that I could say is making sure that there's some sort of communication about your back-end experience with your leads. There are a lot of accounts where we go through and actually identify what keywords have been associated with quality leads. So we truly go in and create labels and create groupings of these qualified leads so that then we can follow those keywords and find out, are these keywords consistently performing to a high quality? Are they consistently connecting us with people that are ready to follow through with our conversion and follow through with the service on the other end? So another way to approach this is when you're structuring your accounts to look at it and say, if I know that these are certain keywords or certain placements that have performed well, that have followed through on the back end as being qualified leads, how can I put those into a place where they're able to spend whatever they need to bring in as many leads as possible, and without being restricted by and sort of that uncertainty of what kind of outcome is this particular lead going to have. And then as you go through the rest of your account and you start to identify more of those particular keywords or placements that are really serving you well and bringing in that quality traffic, then you can continue to put those all sort of in that family of settings that are able to drive as much traffic as they're capable of. So that's one way that you can sort of, it kind of helps you identify in a sort of non-mathematical way. It kind of helps you identify that marginal gain from more budget that you're allocating. As you are able to identify what's quality, you can kind of continue to push what budgets you have for those, and at the same time back off on keywords, on placements, on settings, things like that that have been shown to not actually bring in that quality traffic.
Awesome. Well, thanks so much for that, Carrie. I think you did an awesome job of describing sort of the high-level strategy and the process in terms of kind of thinking about your budgets. So in my part of the presentation today, I thought we would just take it one level deeper in terms of the micro-level decisions that you need to do when you're kind of, okay, now I've figured out that I want to spend X dollars on PPC. Now where do I allocate that within search? So, or like search versus display, or Bing versus AdWords, or mobile versus desktop, et cetera, et cetera. So, yeah, I thought we could get started with this question: how much should I allocate to brand terms versus informational keywords versus branded keyword searches, or like money keywords, which are like kind of high commercial intent keywords? But this is all within the search network, though. And so just so that we're on the same page here, the basic idea here is that within search marketing, you've got all these different types of keywords that you could be targeting, including sort of the top of the funnel keywords. These are sort of these informational keywords from people who are early on in the buying process. On the other hand, you've got these kind of money keywords, which are like people ready to buy. And branded keywords, of course, these also have high commercial intent associated with them. And so obviously, all these have different kind of importances. How do you come up with a budgeting strategy that balances all these different competing types of keywords? And so I thought the best way to do this would just be to just look at my own search marketing dollars. Like, what am I spending on my own word stream campaigns? Like, we spend literally tens of thousands of dollars on PPC every month. And basically, here's what I found this morning. I found that kind of the vast majority of the PPC spend, is being allocated to those kind of low funnel, high commercial intent keywords like PPC software, etc. These keywords are like, we push them to high value conversion pages, like sign up for a demo or free trial sign up. These types of offers. Like if you're doing lead generation, I'm sure you have like different types of offers. Some of them are worth more than others. Others might be just like informational in nature. So for us, we definitely focus mostly on sort of the low funnel keywords in PPC. It's not to say that we don't value the informational keywords. We definitely have like ebooks and white papers that we do with Hennepin Marketing and PPC Hero that have a lot of great information, and we market those ebooks using PPC informational type high level high funnel keywords. it's just that, fundamentally AdWords makes it a little bit hard to go after some of these informational, like high funnel keywords. Because there's less commercial intent, what we find is that it's harder to get the high click-through rates on those types of keywords. That means lower quality scores. That means higher cost per clicks. And so, ironically, sometimes if with these high funnel keywords, we sometimes end up with these higher cost leads at that are kind of worth less to us in the end, and so that's why I sort of capped the budget for those high funnel keywords at 20%. I also allocate around 5% of the budget or 5 to 10% of the budget to branded searches, and so in addition to kind of protecting the brand that we've built, I also view this as a very cheap way to drive quality scores. So these branded searches typically get very, very high, 20, 30, 40% click-through rates, and so that has the effect of kind of raising my quality score for the account, which then kind of reduces the prices that I pay for all the other clicks in my account. So that's sort of my own personal search campaign budget model, but what works for me isn't necessarily what works for you, and so depending on your types of businesses, I thought it might make sense to sort of describe certain considerations where it might make sense for you to spend more or less on these different types of keywords. So for example, I've definitely found that if you're doing an e-commerce, it makes a lot more sense to be focusing on those kind of the money keywords, if you will, as opposed to, whereas if you're doing lead generation, it might make a little bit more sense to also include some of the high funnel keywords. Yeah, also sometimes it has to do with spending money on the branded terms if your company even has a brand big enough and valuable enough that it's worth protecting and investing to protect that. Conversely, if you're just getting started, obviously it won't even be possible to spend that much money on brand keywords since you haven't kind of built up a brand yet. So, Carrie, any thoughts on kind of allocation of budgets between different types of keywords here?
Sure. I think that, yeah, we've been saying about branded is definitely a pretty strong component. I think that in my experience it's been that we definitely make sure that we've got branded, all of that branded language available and that we're running that, but really sort of in a lot of cases knowing that because we've got that strength in our branded traffic, really trying to make sure that we're building out those different kinds of sort of high funnel and low funnel keywords and really just sort of keeping an eye on that and sort of ushering them into those different categories as we go through because, yeah, especially with lead generation where it's really finding out the language, finding out who the user is, either the location or what their behavior is or what their device preference is, really figuring out those details and kind of combing those into the different types of groupings and then sort of allocating budget based on that. So, yeah, it's a really similar thing in the experiences I've had.
Awesome. So the next kind of question in terms of budgeting that always comes up is like, how much should I be allocating to search campaigns versus display campaigns? So again, just to be transparent here, I'm going to just share with you sort of how I'm spending my PPC dollars. Again, I checked this morning. I saw that I was spending 46% of the dollars on display and 54% on search. Now, just this is kind of a very unusual, I think. It's a little, just as a disclaimer, I think that it's very unusual for someone to be spending this much of the budget on display. And I think that we're a bit of an outlier here, and I can explain why. But basically, the WordStream website just gets so much traffic from like our blog and like articles that we write on from other websites, etc. Direct traffic, and so because we just get such a 500,000 visitors to the site every month, it's kind of more important to me to kind of convert the traffic that I'm already getting through all these other sources rather than just adding a few thousand more clicks. And so, yeah, I view the display advertising component as a way of, especially using remarketing, as a way to do conversion rate optimization on the traffic I'm already getting, chasing after the sort of 95% of people who visit my website but don't convert to to lead. Now, I did a little bit of research looking at some data that we have here at WordStream. So we've got this thing called the AdWords grader, and it's graded nearly $3 billion of AdWords spend. So there's like a lot of information in this machine. And so I took a look this morning, and I can tell you the typical allocation for the average account across all of Google in terms of the search and display allocation. It's around 19.25% allocation towards display. So that's kind of an average. Now, just as I was saying earlier, what works for me isn't necessarily going to work for your business. It all depends, and there's the various factors that you should be considering. For example, your industry. So, for example, you could potentially raise or lower your allocations, depending on what your industry is. And I recently did some research into the average conversion rates for Google search and display and network. And compared it by industry to look at the comparative performance, and again, what I found was that certain industries, the conversion rate for display is actually higher than that of Google search. And now, on one hand, I think that's pretty remarkable because display ads just even like 3-4 years ago, they were just so crappy. But now, with all these advances in remarketing and particularly in industries like auto and travel, where you're trying to sell or convey like these beautiful products like a new car or a fancy vacation resort, these images are actually very compelling and convert in some cases better than the text ads. So that's something to consider in terms of your allocation between the display versus search. This is just another example. It has to do with the competition within your industry. So again, some research that I did earlier this year on average cost per clicks in different industries. The reality is that if the cost per click on average in your industry is just so high for search, then by contrast, it kind of makes display look more attractive by comparison. So in this example, look at how finance, the average cost per click here is like $3.09, whereas, display clicks are, $1.03. And so if I just go back a slide here, finance is kind of converting comparably in search and display. That that certainly, that gap in average CPCs certainly makes the display network look pretty compelling by comparison. And so yeah, sure.
So I love all this data that you're putting up there, and I think there are probably a lot of people listening in that are getting a lot of really good information from it. I have a question about, you mentioned on the display network, especially the industries that actually seem to have higher conversion rates through display versus search. For those who are sort of starting into their display outreach and are thinking, okay, now what kind of ads should I be building? I'm working to create something bright or flashy or interesting, but I don't really have a big budget for it. Should I just stick to text ads on the display network? Do you have any experience or any insights as to what people can do, or kind of what your experience has been of actual image ads versus text ads in the display network?
Yeah, you really have to, like, the creative is just so much a part of the success or failure of these things, in my opinion. Like, I almost, I definitely recommend, being in it to win it and trying to come up with some nice creatives. Even like here, I have here in the next slide, like when to not bother with display. And one of the things that I had here, Carrie, was just if you really have a small budget, like under $1,000, and then you're splitting off maybe $200 a month for display, but you kind of want to do kind of a decent job at that, like creating all the nice banner ads and all the different formats and trying out different messaging. And so, like, the cost of maintaining like the effort, it's really important for success. And so I wouldn't even bother with like such small budgets. Is that what you're talking about?
Yeah, I was just kind of curious, and yeah, I think you're right that if you've got a really limited budget, then trying to invest too much in display, especially if you're not going to be able to create, maybe the best ad you're capable of, that might be something you might want to hold off on a little bit, especially if you haven't done any remarketing yet. I think you're totally right that there are a lot of other factors that you probably want to hold off on until you really can feel confident about what you're doing.
Yeah, so just another tip here. The display, in display ads, obviously there's a lot of different ways to target your ads, like managed placements, similar audiences, remarketing, etc. I've definitely found, in terms of display ads, the low-hanging fruit here is remarketing, because it's like people who've already expressed interest in your products and services. And so, I would look to kind of hold back on like investing on some of the broader targeting methods, such as managed placements or similar audiences, etc., until you've first kind of made the investment in sort of the low-hanging fruit here in terms of remarketing. And of course, this assumes that you have website traffic to remarket to in the first place, which isn't always the case.
I really like in the example that you gave of how you spend your budget, that obviously WordStream gets tons and tons of traffic. So I really like that you actually have that strategy of knowing that people are going to be familiar with you, and so when they come through, knowing that remarketing traffic is a really great opportunity to improve that experience for them and really work on your CRO. So I think that's really clever. I applaud you for that one.
All right, I'm giving away all my trade secrets here. Next is Bing versus Yahoo versus AdWords budget. All right. Another very popular question that comes up all the time. So, looked up the kind of the ComScore numbers for July, and if you believe them, it says that Google has roughly 2/3 of the share, and Bing and Yahoo kind of split the remaining third. I'm not sure how much I believe this though, because that would mean that out of every 3 people that one of them is using Bing or Yahoo as their primary search engine. But anyways, looking at data here, I'm kind of a data-oriented person. I ran some numbers this morning. Yes, literally this morning. We kind of put these together just in time. But I was trying to look to see how much money, in terms of we've got hundreds of millions of dollars of client spend under management, and how much of that is being allocated to Google versus Bing. And it was roughly, as of last month, June, it was 10.3% of the client spend was being allocated to Bing. So it not quite that, even though it's they say it's like a 2/3, 1/3 split between Google and Yahoo/Bing. It's just for whatever reason they're not able to spend a full 2/3 or 1/3 of their budget on Bing and Yahoo. Maybe it's because we work with smaller clients, and just if you only have $1,000 to spend, then it doesn't make sense to break off $200 for Yahoo and Bing, because that's just adding a lot of management complexity for a very small sliver of budget. Curious to see if your experiences are any different there, Carrie.
Yeah, I would say that that my experience has been kind of similar. I think that definitely one aspect has to do with sort of who it is that's using these different search engines. So I think that there have been some industries that we've just found a lot of traffic that has just been consistent with one versus the other. So I think that it's really interesting when you really start to dig into that data and see what your performance is, that you can actually realize that there might be one that's better to invest in.
And just a couple other things to add here. I've found, some cases where people are, investing a lot in Yahoo/Bing. It could be that they're in an industry that is highly regulated in Google. Like the keywords are being kind of, disapproved, or the ads are being disapproved. These guys spend 80, 90% of their money on Bing, Yahoo in some cases. And I've also seen people explicitly trying to spend on Bing rather than AdWords for the purposes of risk diversifications, and that's not having all of your eggs in one basket sort of thing. So those are some other considerations there.
I have a question for you, just in sort of response to that, especially that last one for diversifying risk. I know that we've kind of all allowed the smoke to clear from the whole enhanced campaigns transition, and I was wondering if you've had anyone talk to you more about other advertising opportunities outside of AdWords, simply out of sort of wanting to be present in other search engines because of that awareness that things can change, and when they do change, they're their accounts or their campaigns or their behavior might change a little bit within AdWords, so they kind of want to spread out their advertising budget.
Well, so where I do see it happening is in some of the larger spenders. Like, so, you know, we typically work with small businesses, but we do have a handful of big companies, and those ones spending like, you know, a lot of money on AdWords. I think those are the ones who are a little bit more aware of these types of issues. You know, again, if you're only spending $2,500 a month, it's you know, not that that's a small amount for that business owner, but it's just you know, like that could be a significant amount of investment for your business. But like the benefits of just segmenting out like 10% of that, you know, to a different engine is kind of limited. Awesome. So I'm guessing you've heard an uptick of those, Carrie, in terms of like people just
not exactly. I think when the whole enhanced campaign thing came up, I think a lot of people suddenly their ears perked up and they started saying, "So does this mean that everyone's going to revolt and Bing is going to, you know, become this new thing?" I think there's a little bit of fear just in that first moment, but obviously we've all kind of accepted it a little better and actually been able to adjust and see exactly how the whole transition to enhanced campaigns has actually been much less painful than we thought it would be, and actually turned out to be pretty advantageous in some ways. So no, not any actual transition, but certainly a little bit of chatter in the beginning.
Cool. So we're kind of short on time here, so I'm just going to blow through this one really quickly. It's mobile versus desktop. You know, it used to be a big deal because you know, the kind of the mix of mobile versus desktop searches is changing so frequently. It's like changing on a monthly basis, with mobile expected to overtake you know, desktop in the next year or so. And so previously, you know, before enhanced campaigns, you had to have like a separate mobile campaign and a separate desktop campaign, and so, you know, having to figure this out was a bit of a crapshoot because the underlying numbers, the mix of mobile versus desktop kept changing, and so, you know, AdWords introduced this thing called shared budgets, which you know, allowed you to kind of consolidate you know, two campaign budgets into one and all this stuff. But then they released this enhanced campaigns. And basically, what my view here is that I think that this is no longer an issue. So you know, because mobile and desktop kind of, you know, run in the same campaign, that you can just set your kind of budgets according to the kind of, you know, the offer that you're trying to promote, or the value to your business, or the ROI of that campaign, and just set one budget, and the mix of you know, desktop versus tablet will kind of, or sorry, versus mobile will kind of figure itself out. It's more of a, I viewed it more as a bidding issue rather than a budgeting issue. And so just a couple things to consider here. You know, are you a local business? You know, do you have a call center? Are you trying to go after like kind of hired, you know, demographics, net worth individuals associated with smartphones, etc.? What's the ROI of your mobile searches? You know, that'll allow you to just set this mobile bid adjustment, you know, up or down according to your business. And so, geez, we just got to blow through these here. Number 5, how the budget impacts your PPC management model. So one of the key things here is that when you're thinking about your PPC budget, a lot of times people kind of discount the value of time or PPC management costs. Like, you know, your time is not free if you're the one managing the PPC account, or you know, if you have a full-time person or an agency, that also results in, you know, PPC management expenses, and, you know, you're going to have to you know, account for that if you want to be fully transparent. And the observation here is just that your budget really, to a large extent, kind of predestines kind of your management model. So in this example, if you're kind of like the quote-unquote low spender of $2,500 a month, that works out to be, you know, roughly a $30,000 investment per year. So if you were to then hire a dedicated in-house, you know, PPC manager for $60,000 a year, that would actually triple your PPC spend there, and you know, maybe he or she could make the account work better, but probably not by, you know, 300%. You know, agencies, they typically charge as a percent of ad spend, maybe 10%, so roughly $250 a month, but the problem here is that no agency is going to take on a client, for like $250 a month. It's just, it's like, it's just not worth their time. And so, the realization here is just, when it comes to the smaller budgets, really the only options in terms of the management, it has to do with mostly, the kind of doing it yourself in AdWords or using like a software platform like WordStream.
Yeah, and it sounds like, Larry, I know that you guys have a bunch of different kinds of tools that you can use to sort of help with those different kinds of optimizations and making those different settings be most advantageous to your accounts, huh?
Yeah, and it's typically like $299 a month or something like that. So it would actually, the economics would actually work. It doesn't like triple your ad spend. Just the other example I have here. In terms of like, say you have a higher PPC budget, it's $50,000 a month or something, so that works out to be like $600,000 a year in PPC budget spend. So your options are you could hire someone in-house, maybe $60,000. That's roughly 10% of the PPC budget, which is totally reasonable. Agencies also charge around the same amount of ad spend. It's just that they have, they're professionals, especially like companies like Hennepin Marketing. You get a team of you get a team of agency experts that are like really experienced and be able to manage your accounts. And I think it's totally realistic to expect sort of like a greater than 10% return on like in terms of their ability to drive ROI for the spend. And so in that respect, the investment kind of could definitely pay for itself. And so the observation here, and this has to do with your PPC budget and thinking how that really the economics of how you manage your PPC account is to a large extent kind of dictated by what you're spending. Anything to add there, Carrie?
Yeah, I think that kind of what you're talking about is exactly right. And I think with the smaller, especially smaller business PPC managers, I would say that really like some of those tools are really an investment where the more that you use them, the more you understand what your market is, what your own personal business has to gain from it. So I think that not only is it something that can serve to sort of help make some of those smaller adjustments, it really is like a big picture investment.
Awesome. All right, so that brings us to almost to the Q&A part of the webinar here. I just wanted to just give a quick pitch for my software here, WordStream PPC Advisor. So that's my product, my software product. It's like a PPC management platform featuring something called the 20-minute PPC work week. And so this would be for people who are not necessarily full-time search marketers, but are still interested in improving the results of their software on their own. The software just analyzes your account once a week and kind of figures out the low-hanging fruit and tries to figure out sort of here's like 10 things for you to focus on this week. It does it in a way 20 minutes. It doesn't take forever. You won't it's basically like TurboTax for AdWords. So that's kind of the product. It's available for a free trial if you're interested. Another free offer that we have here is our AdWords Performance Grader. And so this you can access either on the WordStream website or on the PPC Hero website. But what this is, it's a free kind of a report card for your account. We'll do an automated analysis of all your key performance indicators and give you a good sense of like how you're doing relative to other businesses in your industry that are of comparable size to you. So it's a little bit like Zillow, how Zillow will give you like comparable houses like within your neighborhood, within a price range, within like certain characteristics like parking or whatever. So the greatest insight here is that it'll just kind of highlight sort of where you're doing well and where there's room for improvement, and this is absolutely free. Hey Chris, are you still there? Do you want to just turn on the poll question for our audience, our special offer for everyone? Thank you so much for attending here. Our two offers, free offers here are, would you like a free trial of our WordStream's PPC Advisor software, and B, would you be interested in a free one-on-one account assessment from the AdWords professionals at Hennepin Marketing, but this is for advertisers with $20,000 in spend or more per month. Do you want to add anything to that, Carrie?
Yeah, sure. Just the free one-on-one trial, that's something we offer with all of our webinars. But basically, if your budget's $20K a month or more, then we actually have our some of our staff sit down and actually go through your account and find out what those different options are for optimizations and things like that. So it really kind of gives you a starting point if you're interested in pursuing an agency or really a more thorough approach at your PPC.
Awesome. So, Chris, I know we only have like 4 minutes here for questions. Do you want to see if we have any from the audience? Audience, you can type in your questions on the chat console.
Sure. Thank you both, and then thank you everybody for sending your questions in. If we don't get to your questions, feel free. We're going to put up some contact information at the end of the webinar, so feel free to contact us directly. And we also like to do a nice follow-up blog post to answer a lot of these questions as well. So let me get right into it. The first question is, can you explain why you would lower funnel if you're doing lead gen?
So that was my slides. The lower funnel, I think, is where a lot of the value is, because they're the ones that are ready to buy. So I wouldn't necessarily want to lower it too much, but you can't only be focusing on the low funnel keywords. I mean, you think of your healthy funnel, you have to have people in your buying cycle at all stages, and so I think for that reason it's important to carve out a little bit, whether it be 10%, 20% or whatever, carve out some of your spending specifically designed for capturing those high funnels, so that you just have a healthy funnel for your business.
Great. The next question we have here is, if my campaigns have the limited by budget status, what is the first step I should take to determine how much I need to increase my budget by? And I think that was one of your slides, Carrie.
Yeah, it sure was. Thanks for your question, whoever was out there in webinar land. So if you have the limited by budget status, I would absolutely say the first place to look is with that little estimator that Google provides you right there in the interface. It's a good place just to kind of look and start seeing what they're showing you is your traffic. They take a 7-day snapshot and give you some estimates based on what they've seen. And so therefore you can kind of look in and say, okay, maybe my impression share has dropped lately, but that's because I went in and did X, Y, Z, or that's because I actually pulled my budget back this week because of something that I'm planning for later in the month. So there might be things that you yourself understand when you look at that estimate that can kind of give you a better insight as to if that limited by budget status and actually increasing your budget is relevant to you. Now, if you really do have room to grow your budget, if you look at those numbers, kind of like the slide I showed, that if it looks like you actually could increase your traffic by a substantial amount, that's when you're going to look into what your impression share is, and then what your lost impression share status is for budget-based activities, and then start going from there.
Great. Larry, can you just expand on what you mean when you talk about what a branded search is? Just a lot of attendees had that question.
Oh, sure. Sorry about that. The branded search is a keyword search that, where one of the words in the search query includes either your brand or a competitor's brand, and so we call them branded searches because it kind of implies that whoever it is who's running the search, it already has a decent understanding of you and what it is you do, and so for that reason they tend to be a little bit more valuable.
Great. So you guys talked a little bit about enhanced campaigns and budget. One of the questions here is, how do I do day parting with enhanced campaigns? I can't find the function that allows me to choose the percentage that the ads will be shown on different days.
Oh, sure. That's a pretty quick fix. If you go into your ad scheduling under your settings tab and pull up where it gives you the chance to choose which days of the week that you're advertising, if you go in and you can start by just selecting 7 days a week, that will pop up as saying, if you want to do all 7, and then it gives you, I think, an option of like the 12-hour versus 24-hour clock, and that'll pop up, and then you'll actually see an entire list of all of those different days, at which point there should be a column that actually says bid adjustment, and then just like you can do it with the geo-targeting and with the mobile devices, you actually can go in and put your percentage change in there. So that way, if you want to increase your bid just a little bit on those days, then that's going to be your opportunity to push that up on a certain day and pull it back on a certain day, and really take advantage of what kind of spend options you have.
Great. I think we have time for about 2 questions here. So the first question is, when you talk about conversion rates, does this also include post-impression conversions, or is this direct conversions?
Oh, for the study that I did, I'm just looking at just the conversions 1 per click, so that metric in AdWords, the 1 per click conversions. So whatever that is, that's what I'm measuring.
Yeah, we talked to.
Great.
Oh, sorry. Go ahead.
No, sorry. Go ahead, Carrie.
I was just going to say that I think that the whole concept of like view-through conversions is kind of something that people are a little uncertain as how much stock they should put into it. So I think that a lot of people typically stick with the 1 per click or many per click, depending on their industry. But the view-through conversions is oftentimes a little too, maybe a little too wishy-washy to use to base your big decisions on.
Yep.
Okay, cool. The last question I had here was, low, high, and branded keywords sound like big budget business. I work with small businesses with low budgets that only focus on low funnel keywords because they want to maximize conversions. How would you advise a small business in this respect?
Well, just be very picky. So, you know, the low funnels, like the challenge there is that other people kind of know that they're valuable too, and so there's going to be a little bit more competition. And so, you know, the key is to then to just, you know, be very picky in terms of what keywords you're selecting, and also the kind of the user context. So, like Carrie talked about, kind of the device, the location and time from where the searches are happening, which is like you want to be cherry picking only the ones that you're really interested in and that work for you, because it's going to be pretty competitive. Anything to add to that, Carrie?
No, I think that's exactly it, is that when you're a small business, you're really wanting to just cut through and get to the stuff that's going to bring in the right traffic for you. So I think that the way you put it is exactly right.
Cool. Thanks. So Chris, how are we doing on the poll here? Everyone, please lock in your votes here. I think there's a tremendous amount of value in the Hannafin free one-on-one assessment and the free trial here. So just click the button, please. And do you want to just wrap things up here, Chris?
Sure. And I'm going to close the poll here. And if you didn't get a chance to vote, you can just contact us directly and make sure we get you into one of those offers there. So let me just close that. And Larry, if you just want to close things up.
Awesome. Well, thanks everyone for attending our WordStream and Hannafin Marketing webinar on PPC budgeting. Here's the URLs for the different offers that we were talking about, and our information if you have any questions that you'd like to ask us. So that's everything. Thank you very much. Thanks, Carrie.
Yeah, thanks so much, Larry. It was great working with you. I hope to do it again.
All right. Thanks, guys.